What's going on, everybody? Back at it again. It's been a while since I did one of these, so I figured I would pop on here, chart some stuff up. Yeah, a little bit of a meltdown, hey? Or on the overall market here, we're looking at an overnight dumper as well, down about 100 points. I'll get into some NASDAQ, some SPY, any names that you guys have that you want to take a look at, please do. Drop them over in the comment section, whether you're watching on YouTube or on X. Appreciate the like or share of this stream as well. I will be live streaming tomorrow during the day for a live trading sesh on X. So if you want to join, feel free. It will be open to everyone who wants to do so. But for now, we're going to get after it. We'll chart some stuff up and see what we got cooking for tomorrow. So I just want to make sure people can hear. Yeah, I think we're good. All right. So let me just get Sharon. Hold on. So, all right. Here we go. Okay, screen is shared. Very nice. Now let me come on over here and make sure you guys can see it. What's going on? All right. So let's do this right here as well. All right, we should be all good now. All right, so I am on the monthly time frame here on NASDAQ, and there's a reason for it. So if you were to take a look, you'll notice that not only do we have a fair value gap, but also a volume imbalance here on the monthly time frame that this candle is currently retracing into. I am fully anticipating a bounce from here, in addition to this monthly level that we've satisfied. I want to also take a look over here at the hourly time frame, where you will notice that 17,471, and I just tweeted something about that, and that 17,471 is sell side liquidity from the run all the way back in February, that we are currently swept, I should say. So to me, this is a decent place for a bounce. So you have that in confluence with your monthly level as well. And, weekly profile wise, I think you're going to see a TGIF or a Friday bounce to kind of clean up this weekly candle, which looks absolutely terrible right now, right? So for anybody who's been watching my content for a while now, you know that the game plan since January was to wait for a weekly imbalance to form in order to start looking for some downside. We're on our way. We're on our way. But just to be fair, and this is why I don't jump to conclusions or try to be the guy to call the top. And the reason for that is, this candle here from the first week of January was also pretty sketchy, right? Pretty scary, but ultimately immediately was bought back up by that bullish fair value gap here. So with all of that being said, what is to come from this point? Now, next week will be very, very telling, right? And ultimately, as long as next week doesn't come back to the low of this previous candle here, you are going to create that weekly fair value gap at 18,053, right? It seems completely unlikely for us to run 600 points next week. And look, I agree. I would agree. But for me, I would much rather just wait. Therefore, I'm not getting stopped out a million times trying to call top like 99% of Twitter is, right? To me, that would just make that next little layer or extra bit of confirmation. That is the next level. And you might say, why are you waiting for that imbalance? Well, if you were just to go back historically, every single time that we've formed a weekly imbalance, we have retraced. Okay, here one, here's another, here's another, here's another, and here's another, right? Each one of those times, there was an opportunity on a retracement for you to get in and load your shorts for that next leg down. So why would I try and continuously call tops when I know that historically price has shown me that every single time we formed one of these imbalances, you're going to get an opportunity to come back, right? And if this is the one time throughout history that we do not get it, then so be it, right? That's fine by me, but I'm going to use the data and previous instances of price action in order to drive me in a way where I am not going to continuously calling tops like everybody else has been, and just continuously getting stopped out the entire way, right? That's not my game. That's not how I play. If anybody knows what my model is, right, it's on YouTube for anybody who's interested. But anybody who knows, kind of my game plan in terms of trading anyways, a lot of the time I'm looking for retracements into discount, right? It would make my life so much easier if we just got into discount of this weekly range. But from using my model, and anybody else who uses it, I bet you they can tell you this as well. At what point do we know that price is going to retrace down into discount? What is the, what is the market's little tip of the hat to let us know that we are going to retrace down into discount? And simply put, it is an imbalance. Even on a 5 or a 15 or any time frame you want, you see that imbalance to the downside, right? That's often times telling you that we are going to retrace into discount at that point, and vice versa. When you see that imbalance to the upside, oftentimes that's telling you that we're going to retrace into discount of the bearish range, right? For example, high, low, discount retracement, bearish fair value gap. There's your dump for lows, and my model is complete, right? So, so to me, I would much rather just wait for an imbalance rather than try and call the top, because to me, again, just using historical data, every single time that we've done this, we've retraced, we've gotten an opportunity into one of these bearish fair value gaps. So here's one. You got two opportunities here. Here's your next. Hold on. Whoops. Hold on. Okay. Here's another. There it is. Price retraces into it. Beautifully done. Here's another. Price retraces into it. Even a volume imbalance. You're getting an opportunity. Check that. Boom. Right? So I'm not sweating it. If it happens, it happens. If not, so be it. But to me, the higher time frame draw was that monthly bullish fair value gap and volume imbalance, which we got into today. So that's kind of where I'm at in terms of how I'm going to proceed moving forward from this point. Let me just pop on over here and just make sure that I have everything on the... All right. Yep, that's it, JJ. You see it, right? So lining up that imbalance also with that hourly swing low that we just swept, and this dates back a while now. So what would be extremely bearish at this point for us to get even deeper? Because where does this monthly imbalance close? Let's just get for reference 415. Okay. So I guess how can we operate with that in mind? And, to me, it's just as simple as this. For price, if it's going to want to stay below this 471, then I think we could see some continued downside. But that's not what I favor at this time. I am favoring a bounce tomorrow, that's for sure. And our hourly range is absolutely massive. So that's another thing that we talk about. When you get these massive ranges on your hourly time frame, those big dumps can lead to pretty big pumps back into discount of a range, right? If we were just to go from our most recent high down to our low, you'll notice these little bumps here, they didn't get into discount. So to me, the range is just getting set. So with that, we have about 440 points to discount of our currently bearish hourly range, right? If we were to take that high at that point, we would shift on the hourly, and then things can get a little funky. But anyways, that's where we're at on the big board, at least. I should throw in a little SPY talk, because I know not everybody is looking at NASDAQ or QQQ for that matter. So if we were to come on over here and look at SPY, you'll also notice here we have this monthly bullish fair value gap here on ES as well. One thing that would be extremely encouraging for bulls would be for a monthly close above that 50.91. So you still have about 2 weeks to go, but a monthly close above that level, to me, that's a previous, whether you use my ideas like the concepts or not. Some people use the break and back test or retest, whatever you want to call it. But if you were looking at it from that perspective, a close above here, that would be respect for previous all-time highs or previous buy side liquidity. And from that point, I would continue to look higher. So that would be on ES itself. And then if we were just to go down to the weekly, because I know, again, even though ES is to me much more reliable, we'll just take a look at SPY as well, specifically on the daily, because this may be the first time where we see price break a bullish range all the way dating back to October. Okay, so since October, every single one of our bullish price runs, we've retraced into discount and we've run for new highs every single time, going all the way back, right? So is this the time? Is this where the tides turn, right? So this is what I have currently mapped out. This is something that, um, because of today's PA and the way that we've retraced even deeper, this little move right here, I'm not really looking to play out all that much. Could we come down here and fill it? I still wouldn't favor that. I mean, I guess it could, but not something that is favorable to me. But at this point, I do think we start to run higher again. I know I'm sure all the bears are gonna crucify me for that, but I'm thinking of it also as the in terms of what's the best risk reward at this point, really. Um, in a sense, if we're looking at our overall daily range, a discount retracement here specifically, we're about 80% into discount of what is a bullish range, right? Can this shift up? For sure. But I don't think the time is now. And I'm essentially risking 20% of the range for 80 to the upside. So I like those odds as well, in confluence with a lot of the other stuff that I'm kind of throwing out here at the moment. So that's just overall on the indices, how I'm kind of looking at moving forward. Anybody who's watching, if you have any specific names that you want to take a look at, feel free to drop them in the sidebar. If not, I will continue here with a few of my own. So let's just go on over and we will look at first. I want to look at NVIDIA and see where we currently sit. Okay, so far so good. There's your weekly, structurally still bullish. And with that, you sweep this higher time frame low last week, came back down for it one more time. Now you're going to see why it's relevant here on the daily time frame. We got deeper into our discount bullish imbalance here. Also prevented a daily bearish fair value gap from forming. And one more sweep of liquidity. So is this the turtle soup move that we're looking for? A move above these relative equal highs up here at 907.39 would create a bullish breaker here on the daily time frame for NVIDIA. Okay. Another thing I'm just keeping an eye on, because this lines up pretty well overall with my model in itself. So low to your high, here's your discount retracement into a bullish imbalance. So the expectation at this point would be a run for high up there at 974. So that's NVIDIA. Very similarly, you're going to notice we have AMD, which looks very similar here. Bullish imbalance here on the daily time frame, also finished green on the day. One thing that's different from AMD versus what you have on NVIDIA is that we actually did form a bearish fair value gap today here on AMD. So that's something where, honestly, this would kind of be the idea for me anyways. I would like to see price balance this range out right here, this red box. So if we're to get up and through that, I would actually look for price to retrace into it and look for that SR flip, whereas previous resistance now turns support, and look for a move higher from that point as well. On the flip side, here it is, your low. Oh, whoops, I'm not going to be able to reach up to your high. There's your discount, bullish imbalance. So I am expecting higher here as well. And really just down the list, another one is ARM as well, deeper into discount. Last night we spoke about it. I'm thinking it goes to 102 first. So 102, and from 102, I think we start to make some moves. Just a few charts that look pretty good, and it's obviously the three that I just mentioned were all semis. On the flip side of all of that, you're going to look at some charts that might not look as good. So I want to look at Apple from the weekly perspective, because I really don't have any interest in Apple for a while here. So I think this is inevitable at this point, that 165.67. From that point, this is the area where I'm really looking for 159.75. That is a monthly bullish fair value gap, which is also in discount of our overall monthly range. So let me pull that up here so you guys can see where I'm at. See, right down into that bullish imbalance and discount. Now that's really the last imbalance that we have here. So that can be a bit dangerous. Now losing that could be really detrimental, but I don't think that's gonna play. So that's really ideally where I want to see Apple move down towards. But I think Apple still does have lower to go, unfortunately, for Apple bulls. But another name that actually took out a higher time frame level today of interest is Tesla. So not quite here on the monthly, but if we were to come on over to, where is it? Here. Weekly on Tesla. Okay. So here's Tesla's weekly. You'll notice we swept the low of April 2023. So not last year's low, I guess, but April of last year's low. 12-month lows, whatever you want to say. But we did sweep those lows. Now, um, if you're bullish on Tesla at this point, ideally you're going to sweep that low and you're going to get going a little bit to the upside. Now, you could look at it from this perspective as well, that if we're bearish on Tesla at this point, you can look at your most recent price run that took out a low, which would be from that high down to that low. And even if you were to get a discount retracement, that brings you up to about 206.92. There are imbalances up higher as well. But at that point, could you look at this from a bearish perspective? Absolutely. I think this one is one of the few that are a little more, what's the word? Conflicting. I feel like you can paint a pretty good picture to the upside, while I can also think you could paint a pretty good picture to the downside, which is sketchy. Now, the only thing that's got me really questioning Tesla at this point is that we're really not working with all that much on the monthly time frame. If we're to take a look over here, yes, we swept liquidity. That's good and great. But other than that, we're really not working with any imbalances. This is a previous bullish order block that we're working on as well as here, but no clear, I guess the proper term for me would be no real clear buy level for me in this setup at this point right now, other than us sweeping this low. And ultimately, a monthly close back into that fair value gap right here would be encouraging, 152.37. But otherwise, this is a real sketch name right now. You know, I'm a little torn on it. I'm still looking at it from a much longer term perspective, but worst case, do we see this down 96? Yikes. There's another imbalance right here on the week, on the monthly time frame, I should say. And then we got one more right here as well. Whoops. So that would be kind of how I'm looking towards Tesla. So let's see. All right, SNAS with KSS. We got SMCI. Sure. I just did Apple, literally 30 seconds ago. Yeah, Tesla's not looking all that great right now. It can clean itself up, but it's got to happen within the next 2 weeks. It's got to start making some progress. That's where I'm at with it. Yeah, I just did Apple. So, Kono, I'm sure you heard it. SGA, if you want to listen back to this. So let's do KSS. That was one that was just shouted out. Good old Coles. Okay, so on Coles, wow. Okay, you have a bunch of equal highs up here. Worth noting. Down in discount, we have that bullish imbalance here, and we have this one down here as well. Okay, so at this point, to me, maybe it's a little bit greedy, but I would prefer it to get down into here. We can absolutely justify a bounce from this point, right? With discount imbalance for sure. We have filled that previously, so I don't know how much weight that's going to carry. Now, two bearish imbalances overhead. Ideally, I think for me, I would like to see it get down into that discount 79, filled this last imbalance before making its move higher. All those equal highs, super sketch. I think we will get up there at some point or another. So But that would be where I'm at with Kohl's. I mean, you even have equal highs up here too. So there's lots of equal highs. And, for anybody who's listening who might be asking, why is that relevant? Well, if you think about it from this perspective, where what had to have happened here for price to stop dead in its tracks, there had to be somebody had to go short, right? It had to be a relatively large short as well. Same thing here. What had to have happened here? Gone short. Now, when we take out highs and lows, what is that telling us, right? The people who are going short here are getting stopped out, right? The fact that we didn't come up here and take out those stops, real sketch, right? So that, to me, that would lead to somebody had to go short here again. To me, that's double the pool of liquidity that we're looking at, right? And if we believe and we buy into the idea that the market's whole goal is to go search for liquidity in order to move price, then where is it going to look? It's going to be looking at all these equal highs up here for multiple pools of liquidity that are just kind of resting above. So lots of them. Am I penny pinching a bit over a couple bucks here? Maybe. We are in discount to the bullish range, but the way I'm looking at it here too is, what's really your risk reward? I'm really adding on $2 of risk in this sense, right? The trade doesn't go bad until we sweep this low down here. This last green candle low is at 17.97, so it really doesn't go bad until that 17.97 to me. So from this point, what do we? It's about $5 in risk. If we were to get it down in the lowest imbalance here, that leaves you with a $3 risk versus $5. It is what it is. I guess different strokes. Very, very reliant on your own personal risk management. But your upside, you're looking at $7 to risk $5. And even if at this point you were looking for that 36 equal highs up here, 36 and 35. Still, I'm not saying that it doesn't make sense. It's just, at this point where we get these relative equal highs, unless we get some sort of imbalance, I'm probably going to take my profits there. So, again, does it make sense? That's always the question you kind of have to ask. So that would be KSS. Now let's keep on popping over and take a look at the next. Let's look at SMCI. Okay. All right, very similarly to NVIDIA here on the weekly time frame, clearly bullish structurally. We haven't formed an imbalance to the downside, so I'm really not anticipating that discount retracement just yet. So now if we were to come on over and look, where is the smaller time frame, the daily? So the daily time frame, we can kind of tighten this sucker up a little bit with the price run that took out these equal highs, right? No imbalances in between that high and that high. So why did it reject? Well, smaller time frame imbalance. We can use that as well as the idea that if somebody's going short here to protect that order, they're also going to short. Again, leaving double the pool of liquidity. And of course, if we buy into the idea that the market is looking for liquidity, that's the goal, then ultimately, it's going to go get those. And so from this point, we got our discount retracement. Beautifully done. Okay, so here's the thing. And this, I mean, I guess it's not dead. Ideally, we would have closed inside that bullish fair value gap at 936 today. Interesting how SMCI really got smoked today. And the video was green. Yeah, and the video was green. But anyways, this trade really to the upside, right? If we look left, we notice that we don't really have many imbalances despite this pullback or drawdown. But if you were to use an imbalance as the structure of your trade, you have your your entry somewhere within this imbalance. You have your stop loss set below the low that created that imbalance, and you look for a specific high in order to target for your drawn liquidity. And at this point, it would be 1020. And then as you work your way up, I mean, ultimately, my model doesn't complete until 1229, but that might take some time, but that would be SMCI. We can look at it on the hourly as well, actually. So let's see. So this one's similar to NVIDIA on the hourly here. Come on over. Let's zoom in a little bit. So we actually had a structure shift, right? We shifted market structure here, okay, with that price run, okay? Here's your low to your high, right? Relative equal highs. There they are, okay? Double the pool, right? I'll just use that one for, oh, that one was actually higher. Whoops, yep, relative equal highs. There's your discount retracement. This wouldn't be an ideal trade situation for me. The reason why I wouldn't view this as an ideal situation for me was just because we have this bullish order block, but not quite an imbalance on the hourly. I like to trade off the imbalances versus the order blocks. Just a personal preference. I think they work a little better. But anyways, model completes. It is what it is. We didn't get. But if we're to look at this most recent hourly run from your low there to your high, you're getting your discount retracement right now. We do have a bullish fair value gap here. Whoops. And we have one here as well. Both have already been tagged. But you have a bullish order block here as well. There are some hourly imbalances that are going to need to be cleaned up, but you are in discount to that bullish range. So, yeah, I don't know. I think the semis look fine in comparison to a lot of the other things. That is for sure. So, but we'll also see how price reacts tomorrow morning. Yep, I can look at Iova, sure. No problem, Snaz. Good eye. Assuming, yes, I did ES and NQ there at the beginning. And I also did NVIDIA. Yeah. And so let's just do IOVA, DXYZ, and then I'm going to call it quits. So IOVA. All right. I'm not sure if we looked at this one yet, Jag. All right. So, oh, whoops. Equal highs. Right. That's good. Looking at the most recent price run here on the weekly time frame, to me the draw on liquidity is higher, but I would prefer to get down to discount first. And here's your first discount imbalance. So at 1080, you'll reach discount of your bullish range or bullish price run. You have a couple imbalances here. Here's another one. Whoops. And you got one right here as well. Okay, so ideally we'd get somewhere inside this imbalance here and take off. Now here's another thing. You have a bullish breaker, low, high, lower low, break above this high. We can view the high of that sequence as support. And you'll notice that already has acted as a support level. So broke above, retracement back into the breaker for the next leg higher. So yeah, not bad. We're almost in discount. Preferably that's where we get it. Let's see where. Very similarly here on the daily, you have that daily gap higher. That'll get you in discount for sure, that daily gap. Let's look over here and see. Not much else that we're using here, really. But yeah, so not bad. Not bad. And then the last one was DXYZ. All right, I've definitely not looked at this one. Oh boy. So it's relatively new. This is going to make things a lot more difficult. But I guess worth noting, you have a weekly bullish volume imbalance here at 28.24. Let's look and see if the daily can give us something. Daily going to give us a little bit more insight. All right, so since inception, your low to your high. All right, so we're in discount. Not bad. Where did we say that weekly volume imbalance started? Let's see. 28.24. What's the low of it? 25. Yeah, so this imbalance here, that's interesting. That's deep into discount. And also lines up with your bullish volume imbalance. Not one that I would trade. Reason being, there's not that much information that I can use. What it looks like now is fine. It's just relatively a new ticker. So that would be the reason why I personally wouldn't. But setup doesn't look bad. It's pretty well defined as well. Break below that 22, it's toast. But otherwise, not too bad. So, let's see. Yeah, I can look at Mara too. Cool. Yeah, so I actually bought more today. Um, Here, and I'm going to show you, I guess, the reason for the idea as a whole anyway. So, where are we? Here it is. Okay, so here I'm looking at this from a monthly perspective here. You have your most recent price run from low to high. You have your discount bullish monthly imbalance right here. Price wicked into it yesterday, and that's why I added some more. If we look at the weekly here as well on Mara, whoops. So due to our bullish structure, in nature, we did sweep that low right here. This hopefully will turn a turtle soup type move. So basically sweeping liquidity in the inverse direction of our overall trend. Also worth noting that up here we have a bullish or a bearish monthly fair value gap. And that would be after the completion of my model up to 3409. So only thing with Mara here is that we are looking at it from a monthly perspective. So this could take time, unfortunately, but it's a name that I like. I like everything about the company. So I'm just curious, do we see maybe some Bitcoin having fireworks come in? Maybe I think it's over the weekend, but maybe over the weekend Bitcoin does something crazy and we see something cool. But yeah, we're in discount now. So that's kind of where I'm at. So let's see. Yeah, no problem. But all right. If that's all, I'm gonna pop off here. I'm gonna call it quits. If anybody has any questions, feel free to reach out and we will get after it tomorrow.